Welcome back, everybody, to Altcoin Daily, where you subscribe for daily videos on everything going on in cryptocurrency. Cryptocurrencies are in free fall. There's no getting around this. This is coming after, well, the biggest catalyst perhaps in the recent weeks is the Fed rate hike, the largest in over 2 decades. Today, Bitcoin was hovering around $34,000, Ethereum hovering around $2,500. I still don't fully understand. Break it down for me real simple. What is causing crypto to tank? All cryptocurrencies are being weighed down as central banks globally try to control inflation by raising interest rates. Bitcoin, in fact, is down more than 20% since the beginning of the year. And what exactly is the policy change that's making Bitcoin go down? Well, the U.S. Federal Open Market Committee last week voted to raise interest rates by 50 basis points, marking the biggest upward adjustment in over 2 decades. Is that it? No, that's not it, but that's part of it. Why is Bitcoin going down? Well, TLDR, runaway inflation, war in Europe, parabolic DYDX, raising interest rates, S&P and NASDAQ putting in new lows. The fact is, the macro environment is risk off, and Bitcoin and crypto is a risk on asset class. In the short term, whales in full control. So where does that leave us? Well, in the cryptocurrency market, for those uninitiated, we're seeing extreme fear. There's extreme fear in the market now. There was extreme fear in the market yesterday. There was extreme fear in the market last week. Of course, you know what they say. If your investment thesis has not changed, when there's fear in the air, that's the time to get greedy. When there's blood in the streets, that's the time to buy. So my question to you is, has your investor's thesis changed for Bitcoin or Ethereum or whatever it is for you? For me, no, it hasn't. I'm keeping my eye on the prize. Over 3 billion users coming to crypto by the end of the decade. Total global crypto users are in the orange. Total global internet users from 92 to 06 are in the white. The technology adoption curve is still in growth mode. And when you look into what's going on behind the scenes, these are things we talk about on the channel nearly on a daily basis. You come to understand that building integrations are getting put in place today. That's going to be here for years down the line, if not decades. For instance, this is really big. Meta's Instagram to support NFTs. We already knew that. The news is they will be supporting NFTs from Ethereum, from Polygon, from Solana, and from Flow. The social media powerhouse won't charge users for showcasing their crypto art. Find out the details, understand why this is big. NFTs from some of the most popular blockchain networks for crypto art are coming to Instagram with the announcement of a pilot as soon as Monday. The pilot will feature a small group of NFT aficionados based in the US. It wasn't immediately clear whether Instagram would support NFTs from all 4 chains at launch. What we tend to see is Ethereum first, and then maybe Polygon or Solana, or maybe Flow, but Ethereum seems to always be one of the first. Instagram intends to support widely used crypto wallets such as MetaMask. Plugging in their wallets, users will be able to prove NFT ownership, showcase them on their profiles, and tag creators who made them. CoinDesk has confirmed Instagram will not charge users for posting and sharing NFTs as Twitter initially did with its hexagonal NFT profile picture in January. This means to me, way more people will take advantage of it. The decision likely spells a rush of new cultural visibility for NFTs. Instagram has over 1 billion monthly active users, many of whom use the platform to promote and market their art. How about this? Google Cloud forms Web3 team with blockchain focus. The division will primarily serve business customers looking to leverage blockchain. Google getting in is a big deal. How about this? Robinhood lists Grayscale's Bitcoin and Ethereum products. Well, wait a second. I thought Robinhood laid off 9% of its workforce last month. I thought we were seeing bearish things from Robinhood. Well, understand this. Yes, Robinhood laid off its workforce last month, almost 10%, but its crypto business is proceeding unabated. This is the TLDR. Robinhood now supports the Grayscale Bitcoin Trust and the Grayscale Ethereum Trust. While its overall business has suffered, Robinhood's crypto revenue grew from Q4 2021 to Q1 2022. Grayscale has also submitted new crypto-based products to the SEC for consideration. Of course, we're talking about the spot ETF, but Robinhood's crypto side of the business has not suffered, and that is a big metric. The fact is, we have buy pressure coming from so many different types of entities now compared to where we were 2 years ago, 4 years ago, definitely 6 years ago. Did you realize that Terra is now beating Tesla as the second largest corporate Bitcoin holder after their 1.5 billion purchase last week? Now, you might be saying, well, wait a second, Terra ecosystem is facing pressure. The stablecoin just got depegged. True. Terra's UST stablecoin briefly lost its peg to the dollar earlier this morning due to intensified selling pressure and borrowing demand. And it's important to note that Terra did not sell one Satoshi. Yes, it briefly lost its peg. It's getting battle tested. This is how we can have greater confidence in the future as these protocols get battle tested, like Bitcoin's been battle tested for 13 plus years, but Terra did not sell one Satoshi. The reason I bring this up is because let's pivot and talk about what Cardano is doing. Do we have any Cardano fans in the audience? Let's update you on what's going on with their algorithmic stablecoin. Cardano set to onboard game-changing algorithmic stablecoin rivaling Terra's UST. The more types of these, the better. The more competition, the better. Better for us as users. The concept of algorithmic stablecoins has recently created a lot of buzz in the crypto space with Terra's UST as the center of many chatters. It appears that the model has gained adherence among crypto architects. The news is this: Cardano and EOS have revealed that they will be taking a cue from Terra by launching algorithmic stablecoins backed by crypto. The two blockchains join the likes of Terra and Tron in choosing not to back their cryptocurrencies with fiat reserves. So let's talk about how all this works. Algorithmic stablecoins are cryptocurrencies whose value is pegged to a real-world commodity or fiat currency, but backed and stabilized by other cryptos. This new generation of stablecoins differs from collateralized stablecoins like Tether and USD Coin backed by fiat reserves. The argument for this new model is that it creates a better decentralized system that eliminates the risk that comes with a stablecoin having a centralized issuer and operator. According to this recent announcement, Cardano's algorithmic stablecoin offering DJED is now live on testnet. DJED, according to the Post, will be stabilized by ADA and backed by Shen, which will serve as the asset's reserve currency. Cardano's DJED was first announced in September last year and is expected to be used to pay fees on the Cardano network. So Cardano's ecosystem is growing. There's so much building and integration happening behind the scenes. Bullish on alternative layer ones like Cardano, bullish on scaling solutions for ETH like Polygon. 7 reasons to be bullish on Polygon in 2022. Stripe and Polygon. Stripe, the global payment giant, is making its foray into the cryptoverse with Polygon. Soon, Stripe will allow business owners to pay using USDC on Polygon. Plus, Twitter will be the first to use it. Imagine the possibilities. Number 2. Underpinning blockchain in Lugano. Lugano is a pro-crypto city based in Switzerland and has decided to settle its stablecoin transactions on Polygon. Thanks to its low fees, the crypto-friendly Swiss town recently made Bitcoin and crypto legal tender. Investors in Polygon. Polygon has been massively funded in February. Polygon raised $450 million in funding, led by Asia's biggest crypto investing firm, Sequoia Capital, with participation from leading global investors, including Animoca, 776, and Kevin O'Leary, aka Mr. Wonderful. Red-pilling Web2 companies. Polygon is onboarding Web2-based companies into the decentralized world of Web3. DraftKings, a NASDAQ-listed sports betting company, has partnered with Polygon and has announced setting up a validator node to help decentralize its proof-of-stake network. Front-running the play-to-earn gaming space, Polygon Studios, the gaming metaverse arm of Polygon, is working at the forefront to bring GameFi and metaverse to the masses. Guess who's heading it? It's Ryan Watts, ex-head of gaming at YouTube, to build out the gaming division on Polygon. Supernet chains. Polygon has several other scaling solutions besides its famed and widely used proof-of-stake chain. One of them is SuperNet chains. These are a set of highly scalable interconnected chains allowing devs to build their project in customizable environments with zero cost. To incentivize devs to build on these SuperNet chains, the foundation has announced a $100 million support fund. And then finally, Hermes 2.0 Nightfall Avail Maiden 0 launching live this year / on testnet. These are big upgrades to Polygon. The Polygon team will be launching Hermes 2.0 and Nightfall to LiveNet later this year, and Avail, Maiden, and Zero chains will be hitting testnet before the end of the year. These, coupled with the Ethereum merge expected in the fall, will drive huge adoption. Also, don't forget an enterprise chain is also in the works. So you better believe I'm bullish on Polygon and other ETH scaling protocols. That's it for me today. My name is Aaron at Altcoin Daily. Subscribe for daily cryptocurrency content. We keep you updated on a daily basis. There's so much going on in cryptocurrency. You do not want to miss a day. Smash the like button if you appreciate today's video, and I'll see you tomorrow.